Now, the market was down today after the big Powell rally. People were having second thoughts. And I told you it's likely a counter trend on the Nasdaq. Maybe the S&P pushes higher as it's going sideways. But again, I think the rally is doomed to failure. Already given it all back with Bitcoin. The market is likely next. The Dow was down 350 points, down 0.77%. The S&P getting a 13 count, as you'll see in this video. 13 count down sell signal. The S&P was down 0.43%, down almost 28 points. Nasdaq down 0.22%. The Russell down nearly 1%. VIX correctly predicted today's down day. The VIX was up more than 10%. Pardon me, the VIX was down more than 10%. The Powell rally predicting that we would have a down day on the S&P 500 either Monday or Tuesday. That would either be a pullback or a reversal. The VIX got it right. 85% chance of a down day Monday or Tuesday. We got it. We got a bearish inside day on the S&P 500. Candle pattern means nothing unless confirmed. Now, the VIX got a bullish inside day, bullish Harami pattern. It was a black candlestick in that we closed below the open, but it was still a positive candlestick. We were still up. And again, opposite to the pattern what we have on the S&P. The VIX turned down off of the 50 period previously with Powell. Got to be able to get back above that if volatility is going to return on the S&P 500. When the VIX is above the 50 period moving average, bad things happen on the S&P 500. I told you to be watching to see if the MACD can get back into positive territory. We do have a multiple point bullish divergence. The same thing on the RSI. RSI has to get back above 50. Stochastic is above 20. It's got to get back above 50 to really get a big surge on the VIX. And if so, then volatility will return. As I said, over the weekend, again, we had some signals on Thursday turned bearish on the S&P. Others did not, like right here. We have bullish signals on the S&P, bearish signals on the Nasdaq. Which one is right? The S&P joined the Nasdaq, which I think is likely with the divergence. Nasdaq joined S&P. I think Nasdaq has peaked. If S&P has peaked, it's got to turn back down with the bearish inside day. Please support the channel with the link directly below that allows me to be able to provide you this information. If you like the charts, you like the indicators, please let me know that by supporting the channel today. If you could take a moment to do that, I would really appreciate it. Thank you for your consideration for that. The Nasdaq signals remain bearish. We'll be watching to see if the S&P joins the Nasdaq and joins Bitcoin. It has a positive correlation with the market as Bitcoin's sharply selling off, giving back all of the Powell rally and much more. It's taking out key support. See Nasdaq do the same thing and S&P eventually follow suit. All the S&P keeps doing is rallying into major resistance, sideways, slightly drifting higher. And it's the retail investors buying. The institution's letting it happen to lull them into a false sense of security right before they do their rug pull. It hasn't happened yet, so it's not going to happen. And then we get boom, and it hits hard. S&P has just drifted slightly above the July 31st peak. Nasdaq has now seen all signals turn bearish. With Powell's more dovish tone on Friday with his speech at the Jackson Hole Summit. Just be aware, we have these inflation reports coming. We got the jobs report coming in just under 2 weeks now. Start seeing a strong jobs report, revisions back up. You start seeing inflation tick higher. Again, the Fed could continue to sit on the sidelines. A few months ago that, again, I expected that the CPE data to bottom out and to begin to rise. That's been correct. We had the bottom with the PPI. I told you it was going to get a higher low and begin to rise. We saw the biggest surge in 3 years on the PPI, the wholesale inflation, last week. Or I'm sorry, the previous week. The previous week, I was right about inflation. Before last week, I told you that two things were going to happen. Trump was going to rattle the market with those tariffs. That did happen. He announced the steel and aluminum tariffs. We still have the semiconductor announcement coming, the semiconductor tariff announcement, and the pharma tariff announcement coming. That before last week, I told you Trump was going to rattle the markets the coming week, which was last week, and maybe on into this week, because these tariff announcements are coming. We're overdue for Trump to rattle the markets. Even if we see positive earnings with Nvidia still might sell off with Trump rattling the markets with the semiconductor tariffs if he announces it this week, which is very likely. Told you the previous week that Trump was going to rattle the market, and that I thought Powell would rattle the market with a hawkish tone, but we got the sell-off ahead of Powell. Nasdaq had dropped 4.30%. S&P dropped 2.20%, had a 6-day losing streak on the Nasdaq, a 5-day losing streak ahead of Powell on the S&P 500. And I told you before Powell spoke on Thursday that because we've had that sell-off, we might try to rally with Powell. I told you it's possible I'm wrong about Powell and that he ends up rallying the market because we've had the sell-off ahead of Powell. But I was right about the volatility last week. I was right about the breakdown with Nvidia breaking the trend line and Trump rattling the market. I wasn't right about Powell's tone. He took more of a dovish tone. Markets like that. And like I said, over the weekend, traders and investors, they're being overly optimistic about rate cuts. Because again, we could see the jobs report revised back upward. The previous downward revisions revised back upward. We could see a stronger jobs report. We could see these inflation reports that we're going to be getting. We're going to get the PCE on Friday. Then we're going to get the inflation CPI report on the 11th ahead of the Fed meeting, and then the producer price index during that same week. Continue to be right about the inflation ticking back up again. Then there could be concerns about stagflation, the 1970s. It could be 1973 all over again, where there's concerns about stagflation. A lot of similarities right now with what's going on, what happened in 1973. Very interesting. Nevertheless, I digress. If you don't know, we had the 73-74 crash. That was regarding the oil embargo. The oil embargo happened long after the crash had already begun. Happening at the end of 1973. The crash began at the beginning of 1973. But nevertheless, I digress again. That's for another day. I'm just telling you that, again, the narrative over social media, we are so back, gonna go, as we're at record highs, major resistance. People weren't bullish back when I called the bottom back in April, on April 7th. But now, man, they're super bullish. The S&P is just churning sideways. We have bearish signals on the Nasdaq. The S&P has seen signals go back and forth, going sideways into major resistance. Look at the PCE inflation data. The PCE inflation data on Friday, the year-over-year headline number is supposed to hold steady at 2.6. The year-over-year core is supposed to come in slightly higher at 2.9. The previous reading at 2.8%. Over month core, 0.3% month over month. Headline inflation for the PCE. Did I say PPI earlier? PCE inflation index. If I said the PPI, that's the wholesale inflation. I said that, I'm sorry. Talking about the PCE inflation data. I just want to make sure I said that correctly earlier. I look at a lot of economic data. So we're going to get that. The following week, that Friday on September 5th, running Labor Day there, we're going to get the jobs report, and we'll be watching to see what happens with that. Powell at the last OMC meetings dashed hopes of a September cut. Now he's totally changed his tone. Maybe he's caving to Trump now. Or worse, could the Fed be worried about stagflation? That's what they were talking about a couple of meetings back. We'll be watching. Do we continue to see weakness in the labor market? Those numbers end up getting revised back upward, and we continue to see strong jobs growth. If it is that way, there's no reason for the Fed to cut. If inflation's ticking back up and we still have a stronger economy, there's no reason for the Fed to cut. And that's what people don't, they fail to realize. Now there's an 84.3% chance that the Fed cuts. This had gotten up to 98% surrounding the CPI released the data in that weak jobs report. Revisions downward on the prior months had dropped back down into the 90s. Now here it is in the 80s. Turned back up, back into the 90s again with Powell's speech. Now it's drifted back down to 84.3%. And again, I told you, predicting the Fed is going to sit on the sidelines. But if Powell is now caving, or worse, concerns about the labor market, the economy, then the concern is stagflation, where you have rising inflation and a weakening economy. This is what they had in the 70s. But if you think that the comments from Powell are so bullish, you better look at the chart of Bitcoin. And by the way, if you want to see my latest Bitcoin video from earlier today, I'll link it at the end of this video. I talked about before, down now 3%, over 3%, and I talked about it at higher levels, that this rally, again, failing. I predicted back over here with this rebound with Powell, we stalled at the 10-period moving average. Guess what? The Nasdaq's doing the same thing. Bitcoin got at the 10-period, the red line, dropping below the 20-period, and now it's taking out the resistance zone turned support zone. It's now taking it out. got was a counter trend bounce. Bitcoin did the same thing Nasdaq did. It had a big losing streak ahead of the Fed, and it bounced back up to the 10-period moving average. Bitcoin doing exactly what the Nasdaq is doing. See, we've given back all of the Powell rally. We had a 4% rally on Bitcoin. We've given it all back. Right now, today, we're down 3%. Over the weekend, we had down days, rejection at these levels, and a bearish realignment of the moving averages. And I talked about this in my Bitcoin update. Amazing charts. Bitcoin's got triple negative divergence in the weekly time frame. So again, the risk is we get a bigger sell-off back towards the 200 period, that we get a bigger sell-off for Bitcoin and the stock market. Now, Bitcoin's had other bigger sell-offs where we haven't had that on the S&P and the Nasdaq. They can play catch-up. Sometimes there's short periods of decoupling between Bitcoin and the stock market. Other times they move in lockstep together. Right now, Nasdaq and Bitcoin are moving in lockstep together at the moment. So I'm expecting a bigger sell-off for Bitcoin. You can go watch my video to see why. Some pretty interesting charts. But could that mean that the Nasdaq's rally fails? Nasdaq signals are still bearish. Bitcoin signals are bearish. S&P, they've tried to turn bearish, and then they flipped right back to bullish. Had half of them flip to bearish, and then they flipped back to bullish. The other ones remained bullish. Nasdaq 100 is doing the exact same thing Bitcoin did. Down nearly 73 points today. It was down 0.31%. Going at the 10 period. Now, let me just say this. We're going to have the Nvidia earnings on Wednesday after the bell. If we don't get a big sell-off ahead of the earnings, it's possible we try to exceed the 10-period moving average and go to a larger Fibonacci retracement. But I do believe that the Nasdaq 100 has peaked with our black candlestick into major resistance. At a 6-day losing streak. We got the Powell rally back up to the 10-period moving average. Today we're down. We get a candle of indecision. We ended up dropping 4.30% from the high to the low. Bitcoin had dropped 10.25%, but they both came down after a losing streak and rebounded back up to their 10-period moving average. Sorry, I got a little frog in my throat there. Stalling at the momentum cloud right here, which is right into the future. But I'm just telling you, even if we get a bigger rally, S&P can go slam up into the trend line again. If that is the case, at the low 6,500 area, Nasdaq would likely get a lower high. See another divergence between the Nasdaq and the S&P. Remember, S&P peaked on Wednesday. The Nasdaq peaked right here on this Friday bar right there on the 14th. Nasdaq peaked, on the 15th. Nasdaq peaked on the 13th. Bitcoin peaked right there on that bar on the 14th. So again, we're testing our 20-period moving average. We're got above it to test the 10, and we got rejection so far at the 10. We're resting right on that 20 period. Do we give back the entire rally like Bitcoin has? Even if we go higher, it's still likely that we're going to eventually come back and take out this low right here. And the diversions play out. Again, it could still go higher or diverge with the S&P 500 with a lower high. If we don't get rejection here, we could try to go a little bit higher. That would be a Fibonacci retracement. And again, likely confirming a lower high where the S&P got a triple diversions. If the S&P can do it, there is a rally with Nvidia earnings. And again, it may be, listen carefully, it may be we get Nvidia earnings. Even if Nvidia tries to rally, Trump could sink the market, coming out and talking about the announcing the semiconductor tariffs. So keep that in mind. And we tried to get an inside day. We went above the upper boundary of the real body here, but we were contained within the entire previous day's trading range with a candle of indecisions. It could be a continuation for a larger retracement higher, or a continuation higher, or a reversal if we have a bearish Harami 2-day pattern, which a wide range bar, and then an inside day would be a bearish Harami, which is what the S&P got today. Now, again, candlesticks mean absolutely nothing. Candle patterns mean nothing unless they get confirmation. Got an inside day, and again, we're resting right on the 10 period. Nasdaq's resting right on the 20 period. If the inside day plays out and we have a 2-day bearish Harami pattern, got to get confirmation. We had set up a lower high. Over here, we're slamming up into major resistance again over here in August after doing it July 31st. And if we do go higher, you're going to slam into it again at that low 6,500 area. If we get a lower high, got to take out the 10, the red line, got to take out the 20, the blue line, and drop back below the cloud. And if we do that, then we can start moving towards our 50-period moving average. Rally failed with Bitcoin. The Powell rally has completely failed, and we've given back all the gains. Do we see the same thing with the S&P and the Nasdaq? All over social media, oh, we're so back. I heard the crypto community and stock traders, they were celebrating this because they believe the rate cuts are bullish when in fact they are bearish. Powell ends up lowering rates in September. He's doing it for the wrong reasons. If he's lowering it because of his concerns, of his concern about the labor market and weaker GDP, again, stagflation is a concern. He's lowering rates because the economy is weakening. That's not good. Again, I don't think that we're going to see something different. I think the Fed is probably not going to cut. I could be wrong. I was wrong about Powell taking a hawkish tone for a speech, but I've been right about other things. I was right about the tariffs. I was right about inflation. I was right about Trump. See, I'm at a disadvantage from everybody else because I predict things before they happen. Most people predict things after they already happen because I have the guts to tell you what I think. Now, again, start seeing the data come in better than expected for the economy, the jobs report, revision for the GDP. That's coming in the coming days ahead. We're seeing improvements. We start seeing the inflation data tick up. Then why does the Fed need to cut? Inflation concerns that they have, believing that the tariffs cause inflation, keep them on the sidelines. I'm wrong. Like I said, maybe Powell throws a market and Trump a bone. Maybe he's legitimately concerned about the labor market if it continues to show weakness. Eventually, the rate cuts are going to be associated with the top, and if we don't get it, and I think the big traders and investors are overly optimistic that we're going to get it, I'm not convinced we're going to get it, as I said over the weekend. Historically, you don't get these big rate jumbo cuts until the Fed begins to panic, and it's associated with the market topping and beginning to crash, beginning to price in the recession. We'll be watching how all of this unfolds, but inside day, for what it's worth here, so far a lower high. Nasdaq has a lower high. Does the S&P go up and go higher? If we do, we'll have a triple negative divergence. If that is the case, it will slam right into the trend line near the low 6,500 area. CD is still bearish. We had the divergence. It's given us a sell-off so far. Now we're getting a rebound back to test the highs. So far, we have not been able to exceed them. Warned you about the resistance, the weekly time frame with our log and linear scaling. Here I have the linear scaling. This is the trend line I've been warning you about for weeks. Hit it in July, and we turned off of it. We only got confirmation, no follow-through on the sell-off from the July 31st high. We went back up and we slammed into it again. That's the red arrows you see right there. Hit it on August 15th, and we turned down. We broke the trend line from the August 1st low. And now we're back testing that trend line. If that trend line holds as resistance, we come back, we could break the trend line here from our more recent minor lows. We've already broken the trend line here from this low connected to the August 1st low. If we go higher, we slam up into that trend line again and form triple divergence on the RSI. This is a trend line I talked so much about from the 2023 low. We had the higher low here in 2024, and we came right back up to it in July and August. Back when I called the day of the bottom and predicted that we would go up and make new all-time highs when everybody was telling us we were going to crash, I told you about these trend lines with our linear scaling, with our log scaling, bounced off major support. Weekly time frame. Here we're at major resistance. It's all about support and resistance. We hit it in July, turned down. Went back up and hit it again here in August, turned down. If we go higher, we can slam into it again, but right now we're back testing this trend line right here to just slightly underneath that trend line. If we go down, then this trend line from these lows here, 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 and now here with our low from last week ahead of the Powell rally, again, that is now support. So if we go higher, you hit the blue trend line, the 2023 trend line, you get rejection off this trend line from the April low connected to the August 1st low, then you have a back test and you break this trend line and you come down again towards the 50, towards the 200 for a bigger sell-off. So the red trend line is key support. The blue trend line is resistance. The red trend line, we have to take out the 63.80 area at the moment. Again, that'd be with tomorrow's bar. We'd have to take that level out. If we rise, again, you have the blue trend line and you have this other trend line to contend with here. It's very unlikely we're going to be able to break above the blue line and keep going Tag it again and get rejection there and go slightly higher. If you do, you're going to form triple negative divergence on the RSI and the daily time frame. You can't make a new high, but you get a lower high than this red trend line. If that is taken out, that would be very, very bearish. Then we're on our way to take out this low here and moving towards our 50 and maybe the 200 period moving average. This is going to be an important earnings for Nvidia because we've had the trend line break, had a rebound with the Powell rally on Friday. Nvidia and the Nasdaq. Well, Nvidia gained today. The Nasdaq and S&P and the Dow, they were all down. Still may rise with Nvidia's earnings. If we do, we want to be watching this trend line right here. And if that happens, it will take it slightly higher. It's a lower high. We want to be watching the low here and our 50 period moving average. Again, it could be that Nvidia earnings end up taking the market lower. Even if it tries to pop higher, back up to back test the trend line, it still drag the market lower. There's major resistance right here. Again, this upper boundary trend line is where our peaks on Nvidia have been. This lower boundary is where the bottoms have been all the way up, and we broke that, we back tested it, and then we had that push down 1 week ago on August 19th, last Tuesday. Lower, got a bottoming tail, and now we're attempting to recover. So if we do in fact set up a lower high, I want to be watching to see if we take out that low, getting a lower high, lower low, and then taking out the 50 period again. I think we'll see a bigger corrective move for Nvidia. There is major resistance, but it still may try to pop up into major overhead resistance before selling up. But you have major resistance. That's where we've stalled right here. This consolidation right here that's broken down now from our rising wedge. That and the trend line breaking, major resistance as I've talked about on the weekly time frame. Here's the long-term channel on Nvidia. The long-term channel from these lows, we slightly breached right there, parallel boundary to the peak over here. And again, this is a long-term weekly chart, all of the data that we have on Nvidia. And we're slamming up into this trend line back in June of 2024. We tried to reach it. Some other highs that were made, moving slightly higher, but we fell short of it. And right now we're just right underneath it, forming this broadening formation. I'll bring it up close and show you. But again, I think Nvidia is going to stall at this trend line here, or with our recent peak just under it. I think we end up selling off and going back up to it one more time for the final peak. This is why I believe that Nvidia is forming a broadening formation. After hitting the trend line in June of 2024, we've come up to just slightly underneath it, just by a fraction. Still may try to hit it, but that's major resistance for Nvidia. If it turns down and this high holds just under it, just a whisker under it, then again we could sell off and then maybe rebound later to test the trend line again. We were just a whisker away from hitting it, got a pullback off of this level, just slightly underneath it. If the sell-off has started with the breaking of our trend line that I showed you on the daily chart, then we can get a bigger sell-off here going into the September meeting in all likelihood. Still get our August sell-off, get one more push higher, which is where I think we're headed, is up to this trend line towards 200. I don't know that we reach 200, but the longer we take to reach this trend line, if we do, that is where we're headed. Now, again, if we get positive earnings, you want to be watching this trend line directly overhead here in the weekly time frame. Again, channel, the upper channel connected to this June peak. And if we rally, there's major resistance right there. Still likely give us a sell-off. Even if we rally with earnings, see a post-earnings sell-off. We've seen with some of these other earnings go up with the earnings big time and then get a reversal. So we'll see how it plays out with Nvidia, or do we just sell off? But again, Nvidia up today, but the Nasdaq and S&P are down. Nvidia weekly chart here. Quickly, again, we're seeing this divergence play out at this multiple point divergence. It's given us a sell-off so far back to just above our 50 period moving average. If we get a lower high, we need to take out that 50 period for a bigger sell-off, or maybe something bigger than I marked here, down towards the 200 period moving average. If we go higher, we go up and we slam right into that resistance trend line I just showed you in the weekly time frame, and we get another reference point of a divergence. It'd be a quadruple negative divergence if that happened. Trend line, as I showed you in the weekly time frame, just above this area right here, that's major resistance. We overthrow it, going to be very, very difficult to stay above that trend line I just showed you in the weekly time frame. These trend lines are just from the more recent price action. Again, the broadening formation, we went above these trend lines, and you have that major trend line in the weekly time frame. Massive broadening formation forming here. I think we're going to see some kind of pullback on Nvidia. Even if we go to a new high, I think it's going to fail. I think we'll get a pullback. So far, we had this peak. That holds, we get pop one more time, and then we see a pullback. But I think you're going to pull back with Nvidia. I think you'll get a final push higher for a wave 5 to complete this broadening formation. Now, again, the RSI is right at 50. So if it breaks 50 ahead of earnings or with earnings, then again, you got to come back and you got to take out that last minor low. You got to take out the 50-period moving average. So we'll be watching to see what happens surrounding earnings. Could be Nvidia earnings or post-earnings sell-off. We've seen with some of these other big tech companies, they rally with the earnings and then they sell off afterwards. Could be Nvidia dragging the market lower. We've had these divergences. MACD's rolled over, but we've gone sideways and still ended up pushing higher. That's one of the quirks with the price oscillator in the MACD. And again, we did form a nice-looking divergence, though, on the RSI. Now we got to break that 50 level. We're up 1% today on Nvidia. It didn't help the Nasdaq. The Nasdaq 100 still ended up down. We already had that 9 count on the S&P 500 in the daily time frame right after we got the peak on August 15th. We got it on the 16th. You get these 9 counts, either you get an immediate turn, which would suggest we get a lower high and continue to decline, or if you overthrow them slightly, like we did over here. We got the 9 count, went a little bit higher, and then you got a pullback. Over here, you got the 9 count, and we went sideways. Over here, you went a little bit higher, and then you pulled back. Again, I think we'll get a bigger pullback than what we've seen so far with the divergences. S&P does go and slam up into that trend line with the Nvidia earnings, then again, maybe slightly above this level. But if the inside day plays out and we start selling off with a lower high at that resistance level from the August 15th peak, you get a lower high, lower low. Maybe S&P joins the Nasdaq, which again, the Nasdaq signals remain bearish. S&P, they've been going back and forth from bullish to bearish, back to bullish, back to bearish. Some of them here, and then others back stayed bullish. But again, they've been going sideways as the S&P has been going sideways, slightly drifting higher. So far forming that divergence on the RSI, maybe a triple divergence, but if we get a lower high, be watching these lows. Bitcoin's already given back. Bitcoin's down now, as I'm making the video, it's down 3.39%, giving back all the gains of the rally. Has a positive correlation with the market. Sometimes there's periods of decoupling, but could it be we get a bigger sell-off with the market? And with Bitcoin, I believe Bitcoin's getting a bigger sell-off. You can watch my latest Bitcoin video at the end of this one. Now, as we've already had the 9 count on the S&P, the Dow completed the 13 count. I talked about that over the weekend. We completed the 13 count, did get an inside day, which could be bearish, a bearish Harami pattern here on the Dow. It did move to new highs. Remember what I talked about last week? I told you, again, could the Dow camouflage what's going on? We had that big rally to new highs on the Dow. We saw the tech sell-off with the Nasdaq dropping 4.30%. Nasdaq's not making new highs. Nasdaq's nowhere near the highs. The signals are bearish on Nasdaq. Could the Dow be camouflaging the initial beginning stages of the sell-off? I think so. But we've got a 13 count. Again, sometimes you get these counts, you overthrow them. 9 count, you overthrew it here, but then we still had the volatility. 13 count, you overthrew it a little bit, you had the volatility. 9 count, it returned immediately. So again, do we turn immediately or start selling off with this 13 count? Got it here on the Dow, you got it on the Russell today. Here it is on the Russell, also getting an inside day. What that is a bearish Harami pattern. You get a wide range bar, and then the next day is contained within the previous day's trading. Let me just adjust this. The next bar is red, and it's an inside day, and this is what we do have on the S&P 500, the Dow, and the Russell. Usually it's contained within the real body. The Nasdaq is not contained within the real body, but it is a candle of indecision in the form of a spinning top. At best, a sloppy pattern of it. We do have bearish inside day. Now, again, the candlestick has to be confirmed with the close below the previous day's bar, which would be the Powell rally. Candlestick is meaningless unless confirmation takes place, and then you need a follow through. That's what we have on the Dow with this inside day. We have a bearish Harami pattern. has to be confirmed by taking out the low. Now, again, Trump comes out ahead of Nvidia earnings, or comes out tomorrow, maybe later today, or ahead of Wednesday after the bell when Nvidia reports, and comes out and starts rattling the market with semiconductor tariffs. Well, we could easily sell off and see these patterns play out. So we'll be watching. Can the Dow and the S&P signal slip back to bearish and join the Nasdaq, Bitcoin, which signals are bearish? It's an even nicer looking pattern on the S&P 500. Really nice looking bearish Harami pattern there. Again, if we get confirmation, we got to close below the Powell rally, that gap higher, come back and try to take out the lows here after the August 15th high. We get a lower high or go up and slam into that trend line and form a triple divergence trend line from the 2023 low. See this pattern play out and start to break the trend line underneath that I showed you from our recent minor lows.